Yo, what is good? Hi TF Mob. It is your boy AV back with another video today. And I just wanted to go over the Friday review as well as do the market analysis for today. Hope y'all have been having a great weekend. I personally have. I've been pretty chill. Honestly, I did have the time to put up that Friday video, but I just didn't get around to it. So I just figured I'd do it all today. Because last week was one of those weeks where like I basically just had to step away from the charts. I just didn't really want to continue doing much breakdowns as far as where my mental place was at after the moves played out. And it's not that I was like super angry or anything. I just knew that I just didn't want to be at the charts breaking down after missing so many good moves. Like, and it was crazy because all the moves that I basically marked up and called like played out to the T, like almost near identical. A couple of charts did a couple of different weird things, but since we are rolling into the new month as well, today I will be doing a couple reset on my TP lines for the daily charts and the higher time frame lines and whatnot. So basically, we'll have refreshed outlines, and then we'll play off that map for the next month. So starting off right away, we'll just hop right into this with AU. AU was one of those pairs that hit me with the false breakouts going both ways. So I tried to buy early in the week, thinking that price was going to play off this consolidation zone and then rise out. It spiked up and then wicked off and then closed back under our previous weekly high candle. So then once it closed under, it trailed back down. In my mind, I started thinking they're going to go for the sells at least down to this level, and that is not what ended up playing out. So if I go down to the hourly, you can kind of see more in depth where I thought we were going to have the price. Which I mean, honestly, these entries again are not bad. This is the type of stuff that can happen though when you're entering on the breakout rather than off the retest, right? Because if I would have just rated for a retest, because where this broke out, price came back and then retested this low, this was a valid entry. That would have been a retest. But shortly after, like literally the next hour later, it closed with a bearish engulfing, which made that the valid sell entry, which broke its structure. So like that, I would just had to have stuck around for about another hour to basically get out that move in time. But the way I'm trying to trade or at least move into trading for this next year is really just set it and forget it, which is big shout out to the Alex FG challenge, Alex FG podcast, because I know he always talks about how he sets and forgets his trades. And honestly, in my history of trading, the most times that I've seen the best results have always been when I set things and really just leave stuff alone. But this week, it just, again, towards the end of the month, you're always going to get a lot of consolidation because you have a lot of these monthly candles coming to an end. And once they're coming to an end, it just depends on what the structure is on the monthly that'll determine how it's really going to close out. So just the zones that they're in, it's easy for it to play both ways. But if you're able to decipher your daily, your weekly, and your 4 hours, you should be able to kind of play off those lines and play off those reads essentially. So price broke out here. And this was basically just a retest to this low. It closed above, and now we had the full break above this previous high, which continued our uptrend. Price was then coming down to retest. Once I seen this bullish engulfing off of the top of the previous weekly high, I was like, okay, I'm gonna get in here, but wait for it, right? Price moves up, and as it looks like it's getting ready to break out, I look for my entry, place my stops just below the second candle before, and then sure enough, same thing, false breakout, shoots as if it's gonna go out there. And honestly, I was sleeping during this setup, so I didn't really I didn't touch anything. Woke up and just saw it spiked out. I was like, all right, whatever. That's cool. It looks like it actually just came to retest the same level and should potentially break structure. If it doesn't break structure by continuing up and breaking this previous high, then we know we're probably going to go back to the downside. So again, like this month, it's looking like it wants to end more bullish than bearish. And I do know that now we are officially in a recession. I don't know what fundamentals exactly declare that, or what the details are to that. And that's something I do want to work around this year, is getting better with fundamental analysis. But it's not needed if you're pretty good around the technicals. So right here, where this monthly is ending, it's looking kind of bullish. And this next monthly candle could either continue up to test this previous high and maybe get out of here, because this could have just been a downwards channel, which would have been something like so. This could honestly, yeah, this could have just been channeling down and just testing and not trying to really sell all the way, or vice versa. It could just be setting up to break out to the downside. So we have the next month that's going to start up, and that's where we'll play our next moves off of. But for right now, if this were to close back above by the first, then back above this level at in specific 70K flat, that would be probably a good area where price could reverse out of here. Possible. Yeah, it's not likely, but again, we like to keep an open neutral bias. So we'll play it by ear as the time moves on. So going back down, another big part of why I think it's going to continue is just because seeing how this weekly close with the bullish engulfing. This week also continue that bullish movement. And now we have this next week coming up, which either can close with a bearish engulfing or actually just close closer to our TP1. But based off the momentum on the daily, it does look like it's trying to trail there. We do have this consolidation ascending triangle situation here where it broke out that previous weekly candle high. And when I keep saying previous weekly candle high, whenever I'm saying that, I'm referring to this. These zones are marking the previous week candle and the peak high and the peak low of it. This is how I can know where we're really trying to go by the end of the week. There's also a big reason why I was stinging about the other moves this week, because they all played off my lines. So GU was pretty identical to AU. They look pretty much the same. But as you all know, I like to trade twin pairs to try to find correlation in the moves. If I see two things happening on one, it gives me more incentive to get in. So again, same situation where I saw that buy is where on AU is where I took that buy. On GU, same thing happened where the false breakout happened, failed to break, drops, hits the flip zone perfectly, collects the bag, collects the liquidity here, and then comes back up, breaks the structure, has a valid buy. I got in on this buy and then got stopped out before it went up in my favor. I was pretty hurt about that because, it was a complete 3% move that could recover a lot. I guess I shouldn't say upset. I was just more surprised that I actually did get stopped out. But, I shouldn't have been, knowing that, the market, especially Graber and Pound, is very volatile. So, this was just, I guess from the zone, I just figured, price wouldn't come back to touch that, but it did. And it respected its previous low here and where it broke out here. So it really just came to test that zone and then got out. If you guys remember me marking up those blue lines from the beginning of the week, that was also really good markers for me to figure out this initial setup of the week. This one I didn't grab, and I wish I would have. This also would have been another 3% close. But as you guys can kind of see, like when you get stopped on these situations, giving your trade room to that previous leg is always ideal, right? Because you just never know. You literally just never know. Like I could have done that instead. But that's, moving forward, I know how I want to adjust my stops now. And it doesn't guarantee that will never happen again. But, it's part of the game. It's just how it goes. You just have to kind of give your trades room, especially if you're planning on holding for a couple sessions or a couple hours. So here we see that price created this low, created this high, created this new high low situation here because the wicks, it's still safe. It didn't break. And now we have the bullish engulfing. So, price is going to try to trail up. So on Friday, once I seen this, I set up this setup to take going into the weekend. But then I was like, after dealing with how much I got stopped out, I didn't want to really risk anything else. And I just want to play it safe moving forward to where the moves I get into are pretty certain. And then once I win maybe 2-3 trades, then I'm back in it to continue scaling my account. So right here on AJ, this was one of those other examples of, man, it was just beautiful. It was beautiful I played. So we start off the week down here when I was breaking down the charts. Then I was explaining how price was starting off in this level. We're starting this weekly low. And I was like, it's probably going to buy up first. And then after that, we'll probably see the sells at these points of interest, right? And the peak point of interest being the peak previous weekly high. So sure enough, price bought up, got to the zone, consolidated, and then this is where it faked me out for the real move of the week. So they threw the buy, right, going into the breakout of this channel or this consolidation zone, what I thought to be the actual real move, because I was like, okay, this is the first leg. This should be the second leg and it should break these highs. When this rejection happened, again, I was sleeping. I didn't know. Price comes back, wipes me out, and sure enough, comes back and tests the point of interest. Not fully, but gets near it. And then, as we know, when price wipes out our previous consolidation and breaks the whole structure like that, that's an indication of reversal. So that means institutions stepped in and then they just cleaned out all that liquidity that was built up from the beginning of the week. Because remember, the weekly likes to throw the fake move first of the weekly candle, and then the real move by the end of the week. So it was an interesting way they did it, because you can see here, this is where we ended for the week. And at one point we started right here. So price bought up, tested this wick. And honestly, the good indicator that that wouldn't have gone past this was that this previous candle was already dead on momentum anyway. But once it got here and then broke its structure inside, we can see the price completely flipped. And then this is where price really wanted to go for the week. And again, another part of why I even thought that would make sense too was because we're coming up on the end of the month. So the end of the month, it's ideal that, like, if it wants to continue that structure going into the next month, it would have to kind of set the previous month ending in a way that allows that next monthly candle to continue going down, right? And then test. And by the end of that month, we should be back in favor. It all comes down to how they do it and how it plays out at the end of the day. It may not be crystal clear like that, but that's kind of the gist of how those play out. And honestly, since this is already, a peak buyout here, it makes sense that this could actually trail back. And then we can get a test of where we actually broke out at our demand zone, because this is still an area of demand here, this big box on the monthly. So that just takes so long to actually play out. But again, if we know that's a general direction, we can play that down on these weeklies, we can play that down on the daily, and so on and so forth. And if I'm looking at the daily, the amount of momentum that was thrown on that rejection looks like it might go down even further for this liquidity pool. And if that plays out and then respects this low, then we know we're due for a rise, right? And again, you got to keep in mind we are in a recession again, so markets might be dipping for like the first half of this year. We don't know though. So again, right here, oh my god, UJ was just so fired, so fired. Like I was just it is what it is. But yeah, right here, price starts off for the week, starts buying up. I should have just set and forget on this first setup, because that ended up hitting the full TP. It took a little bit longer than I expected, but it happened, didn't stop out. And then once it hit TP, there was other entries that I saw here. This move got stopped out when I tried to re-enter. So I actually think I closed this one out a little early because I saw the breaker structure. And then price looked like it was going to continue selling in this zone. And remember what I said about those blue lines, right? Like when we started off the week, it looked a little something like this. I was talking about how we have these supply and demand zones. This was an area of a demand zone because we had seen price oversold. And then once price broke out right here and tested the demand zone, that declared it a valid entry. And now, because on the hourly, we had our mid zone level, our mid level marked, and we had our peak low marked and our peak high marked for the hour chart. That's how we knew this was a general direction it was going to head, based off how the candles were printing in this middle space, right? So as literally price played off, price played off these lines all week pretty well. You can see it respected that low, went up, created a new high low right here, respected that, created a new high low right here. Now here's the breaker structure, right? So now I'm getting out of wherever I was buying in late. Then I seen that setup right here, looked like a bearish engulfing, but then the rejection happened, stops me out, tests this level, but doesn't break past the top of the blue level yet, but then bounces off of it, retests this high, creates another breaker structure. And now at this point, you're in a consolidation trap, because for so long, price is just moving sideways. So this is how I marked this next zone. And then when price broke out this zone, this is where in my head, like at first when I seen the sell, that was my initial thoughts. Once it broke out to the upside, I just let it go. And then I was like, let me just wait and see what happens. So price broke above the top line. And that's when in my head, I'm thinking, okay, here comes the buys up to the swing high. Sure enough, institutions step in. I actually was there, okay, right here. I got to the market right here. I literally seen the market just like this, and I set up this sell move, right, for this target. And I'm like, this makes sense, because if I'm looking on the 4-hour, look, full bearish engulfing. The structure is not done yet, and there's still all this space to the downside. And there's still a wick they had to collect. So at the very least, price was going to get down to here. In my mind, I was like, I could squeeze my position down to here and just take it down to here. Sure enough, if I would have did that too, still would have worked out. Because again, when the institutions move the market, they move the market. It's not like there's going to be any type of it's going to come back. Like, no, when it moves in favor of institutions, if you smart with the trade with the smart money, it will move just like that. This is the moves that I be trying to catch as a swing trader. So really a lot of the difficult part about swing trading is not getting caught up into this behavior or these internal Berkshire structure that take your eyes off the big picture. Because once you lose sight of the big picture in the middle of your week, you're done for. They're going to wipe you out at some point because you're so caught up within these little moves they're making to really just manipulate everybody. So sure enough, it happens. It happens to the best of traders. It's not like you're going to avoid it, but the best way to avoid it is truly just trust what you know, take what you see when you see it, and really just leave things alone, and just let your strategy play itself out. So again, here was GJ. This was actually one of the setups that did end up winning for me this week. This was one of the only ones I took that played out just fine, but also correlated with those initial buys with UJ and AJ as well, like back here, right? So same thing happened with that, where it got up to the points of interest that we talked about, left the demand zone down here, broke above my blue lines, hit a discount, price goes up, price shoots all the way up. And I'm thinking at this point, we're going to break past our previous weekly high. Nope. As soon as the rejection, and this is the part that hurt me the most, is that I didn't pay attention to the simple fact that we hit my peak weekly zone and wicked off. Once I seen this, I should have already known that now it's time to start selling for the week. Because again, I only mark these up to know where our current weekly candle, like what it's doing throughout the week. That's the only reason why I mark the out. It's basically like an out of bounds zone. So now we know when the week starts off, right? Remember, it's always going to throw the fake move. It has to, that's just the nature of candle structure. It's going to throw the fake move. So if I'm on the weekly, right, and we knew last week it threw the fake move to the downside, went up, and then closed down here. We knew these were the ranges it played in. This week, it opens up here, shoots all the way back up here, but doesn't break it. We know, okay, this week is going to go for a finish to the downside. Sure enough, I didn't catch on fast enough, and lots of pips missed for me. But it's okay. Again, I don't dwell on it. It's just you got to learn from it. And next week, this upcoming week, we're going to do better. So that's the review. That's going to wrap that up. We're going to brush up these lines, and then I'm going to get into the breakdowns for the weekly analysis. Here we go. So I actually like this. But yeah, there was just some great, like really, really good setups all week. And I was just like, man, like I wasn't seeing them in the moment, but you know, it happens. That's just part of trading. And that's part of like, there's also part of like the fear of missing out. That plays a factor in that, because when you're not letting the markets come to you, because a lot of what happened this past week was like, if I had let the markets come to me, the execution would have been really, really good. But because I wasn't doing that, that's where I played myself. So if you let the markets come to your lines and then you read off of that, you're always better off. As a matter of fact, it's going to be a new month. I'm actually okay with removing all this. Yeah, we'll clean slate everything, and we'll play everything brand new. Get a fresh start so things don't look as hectic, so that we're all on the same page. I like to start, if you're new to this channel, I like to start all my lines over whenever there's a new monthly candle about to open, so that I can freshen up all the lines and play everything by ear throughout that month. That's the JXY. I guess I could do the DXY and JXY and whatnot. That's actually not a bad idea. So if you guys know anything about indexes, they're basically the charts that show you the strength of the individual currency itself. So for the Japanese yen, this is its chart. This is its chart for the euro. This is its chart for the Australian dollar. This is its chart, and for the US dollar, this is where we're at. So basically, using this, you can kind of determine your entries as well. Which I'm gonna end up doing everything all together. But we're gonna blaze through this. You guys know me. I start top down. I start with the monthly, just to see what the candle is looking like. We know this is the zone we're playing in. We know the structure overall for monthly. Looks like it's in an uptrend. So if I grab my marker, or my brush, right? We have price come down, create this low, came up, create this high, create this higher low, create this high, and then you have this low created, lower high, lower low, lower high, lower low, and this peak, right? But at the same time, this is where our previous level is. Price just now broke under it, so it's possible we can get a lower high and then get a continuation and collect the bag down here and then get back up. Or again, based off where we're at, price could break back above, close above by the end of this month, and then continue up. And this could just be a simple bull flag. Okay, so those are our potentials. That's why I like to look at the monthly as a overlook, because then now based off how this current candle closes, we can kind of get a better discernment of that. So now we want to get the weekly chart and find our flat levels. So 67K flat will be one of our levels, and this is a bank level. Okay, and again, I like to mark those so that we know our lines. This is the weekly target. Boom. Okay, and the reason why I marked this is because if we're looking at the top of the weekly leg, price was coming from this high and then created this leg, right? It created this peak low. And then at our peak high, we have 72. So we probably have this mid-level here, 72,500. 72K500. Okay. And this is our mid-level, but also our weekly target, which is just about as strong as the bank level. Not exactly as strong, but just about as strong. They're still pretty well. So now if I go down to my daily, now we mark our TPs going both ways. So if I'm looking at this, if I look down to my left, the first TP for me personally, I would put it here. Okay, TP1. The second TP, putting definitely right here. Okay. Right, and in the third TP, I'll look way over to my left. This low right here had an institutional shove at this wick, right? Price didn't come back. We'll also get just about enough room between 2 and 3. Okay. There you go. Boom. And now we have that says TP1 for me. Remember, I'm not looking at the values. I'm looking at specifically the wicks that need to break for price to continue to the next level. So if price is going this way and broke this wick, it's going to continue here. If it breaks this wick, it's going to continue here. That's just the nature of price. That's how we read our wicks. That's how we read how smart money is going to move markets. So if price breaks this wick, and then the next potential level would be here, it would have to break this wick for us to see continuation past this high. Okay, and you can even see there's some confluence there with our weekly target. So this would be TP2, and our TP3, of course, you can do right here if you want to keep it tight, or you can do up to here, just to give it room, and then kind of know that, all right, that's our third maximum height that can, price can really hike to. So boom. Okay, so this is what I see as far as TPs on the daily. Now drop to the 4 hour here. Okay, and we know price is in the uptrend, right? And now this is because we know price is in the uptrend, we can kind of look at the overall direction here. So you see price goes up, got low, higher high, higher low, higher high here, higher low, high, higher low, higher high, higher low, higher high, or well, lower high in this case. And I'm just kind of like vaguely mentioning it as far as when I'm saying higher high, because some of these, right, in order for them to really be the higher high, remember, we just need to see that wick break. So if we start from the wicks, got this high here, comes down, this low here, comes up, it closes above that wick, creates this, creates that high low, closes above right here, boom. See what I'm saying? It's closing above, comes down. Couldn't do it. Respects. drops down, starts in little internal breaker structure, but still ultimately respects the overall structure. Shoots up, boom. Yeah, this is where our fail happens. We got this wick created. I actually shouldn't even done the wick, but the wick is created. We really want to come down to like right here and then go up, right? Because that's where the potential breaker structure is. So if price doesn't break this level here, then we know price could come back down and then do vice versa. And then wipe out liquidity going the other way. So off the strength of that, now we can dissect everything, right? This is where we go ahead and we find all of our anchor points. So we know right now our swing low is right here still because price has not broke it. Okay. So this is our swing low. Take that off. So low bound. Got our swing high up here. If I'm looking at price, came up to this high. And it created this. It did break here, which did create this height. That would be like your peak swing high. But at the same time, you got to remember, once this peak is created, this is technically an internal breaker structure. Because yeah, this was your previous high. It did get broken from down here, right? So you could say, yeah, this is your swing low. And that's valid. It's definitely valid. But because for me, right, if I want to keep it like still coinciding with the higher frames, I'm going to kind of look at it as I want it where the previous 4-hour low is, because that in reality is your true anchor point in order for the entire 4-hour to really pivot. This is actually valid too, like I said again, because this is more of a fresher anchor point. So you could mark that as a mid-level, but this is exactly why in this case, I start using my horizontal ray on the hourly, because then I can do that type of stuff within that range, right? So I can change this to the blue like I told you guys last week, right? And then start marking my levels. So this would be the mid-level. This is our current, I guess you say this would be your peak high. We'll keep it that way. This would be your current potential high within that next hour that could be hit. And then you have your potential low, which would be down here, right? So while price is playing out through all this, I can literally start kind of playing it by ear based off how price is shifting. Okay. Because now if price starts breaking into this line, then I know I can start looking for sells down in this line. And then vice versa. If price breaks above here, I can start looking for those buys up to wipe out that swing high. And it's all in correlation with that 4-hour, which helps us discern whether we're playing into the trend of the daily or not, right? So that's why the 3 blue lines are there. And that's what I've been like adding as my own thing. It's just kind of a good way for you to be able to like drop down to your 15 and really know what's happening, right? Because now at this point, you know where your anchor points are for the entire trend to shift, but at the same time, you know where the internal breaks of structure are happening, so that you know you can time things to line up with your high frames a little bit better. And you can kind of squeeze your entries if you can find something really specific. So right here, I would just kind of play it by ear off that. And then you could mark your liquidity zones. So this could be one right here. And remember, our liquidity zones are our targets, right? So the banks go for liquidity. They go for the pools of money that are left behind, aka your supply and demand zones. So here you have your liquidity top, liquidity bottom right here. Okay, then you can do the same on the way down. This would be valid, right? It's not a lot, but it's definitely still liquidity because price moves sideways for about 2 to 3 hours. Okay, so that's still a pool of money there, right? And this is for like specifics. So this is if you really want to get detail with everything. And the same works going the opposite way. So if I look to my left and go upwards, you have this liquidity zone, right? So like remember, I always like to look for those double tops, double bottoms when it comes to these, or just those one pins like this, and then where price just kind of still continues sideways, but just never touched again. And then here's your double bottom here. And then when price came up, respected, and you could have found your entry in your 5 minute down here off this bullish engulfing, took it down to the zone. Right. So this is what I meant by like you can get way more detailed, and this information you learn from Real Rise Academy more in depth. So if you guys do want to get like the actual course from them, you can go ahead and sign up through my referral link that's in the description, and then you can learn a lot more details that actually play into this too. Because yeah, there's more to it, like this fit. Okay. So yeah, now we just play off that, right? And this fib helps me again understand when price is at a discount and at a premium, because when price at a discount, as an investor, what do you do when price is discounted, but you know it's still going to go up? You keep buying at those lows. So as a trader, you might get out depending on how you leverage, but as an investor, if they want to go up, they're going to keep spamming every time price drops again and buy those new lows. So we're going to go ahead, drop to AU and do the exact same thing. And again, this is my strategy. Not everybody does this. Some people only use trend lines. That is totally okay. Just do it how you can see it the best for yourself. Oops. So we can see here monthly has come down towards this previous wick. It is still kind of in that downtrend phase. We know this is the previous high of the monthly, and this is our current low. If I go down to my weekly, that'll help me determine the leg on our weekly as well. So we know when it comes to bank levels, we have this 1.1, 1.175, 1.17,500. I want to say. I also do want to do my bank level flat of 18K. I much rather preferably do that because those are stronger levels. And if it really didn't close under that, that's telling me something. The fact that it bounced off of that. And then of course right here, we got the peak weekly high at around 1.2600 flat. Okay. So you can see the reaction happened after price either closed within or basically closed within it. Right. So you can see as soon as price closed back under, that was where the test happened and out of there. As soon as price closed back under, this is where the test happened and then out of there, right? So now we know those bank levels are pretty firm. We drop to the daily, we mark our neutral take profits. So again, the closest one in this case for it to really have to break its structure would have to hit right here, right? So I'd have to see this peak low get wiped out and then price stay under this line for price to get to my next TP. Or if you want to do this actually works too, right? That's valid as well. Because again, now you can mark your TP2 down here where there's a little bit more room. Boom, right? So now if price stays under here, now we know we're headed here. We can go ahead and do this, bow, TP2. And this was be TP1 right here. Boom. And then now if I look further left, TP3 is definitely going to be the bottom of this wick, because I don't see any other reason to be down there if it's not this wick. I'm not going to lie to you. So I'm going to, do a safe touch, right? So I'm going to do a safe touch where like, if I'm putting it right here, right, specifically, but visually what I really am visualizing is this. This is really the whole take profit zone, right? Because if they come back down, there's a pool of money down here that they're really just trying to tap and collect and stop these guys out. Because think about it, people are buying back here. There's some people that bought down here and have not let go of them trades. And that's because they figured once they seen this, they felt like they're the richest people in the world. And they thought that full W pattern was going to play out. But banks were like, no. We're going to come all the way back. We're going to get majority of these guys out. And if we can, these guys too, right? Because it's still game that they could do that. They would have to respect this previous high in order for that to be valid, for them to really go down like that. So yeah, they still could get these guys. And then if they do get these guys, and if they don't, they're just going to get out of here and then take out all these people that were selling back up here that thought this was just a seller's market, right? They thought this was just going to run on and on and on, which it's possible it can. It does look like it's at a triple bottom right now. So this is one of those trades where it's like you're probably catching it at the very beginning of a potential buy, long-term buy. Because if you're an investor, like, yes, this wouldn't be a bad low to buy at. This would be a great low. You could do your buy right here, put your stops all the way down here, but that takes so much capital to hold that. And then also, not only that, it takes time. Like, I'm talking about good time before you see the returns for that profit. So again, we're trying to keep it small. That's the same concept that we would do there. We're applying right down here. Again, we have our TP1. Got a nice little hit. Yes, sir. And then TP2 could be here, right? Or it could be higher up right over here. I personally am going to put it up here. So that little confluence again. And a big reason why I'm okay with doing that is because I know, like, I can visually just look at this and know that price has to stay above if we're going to get here, right? So that's probably where you'll see some blue lines are going to get involved with that wick. And then right up here, you can do your TP3, or you can, again, have more room and take it up to here, right? Valid. So now we drop to the 4-hour and you're in the same uptrend, right? So you had this zone, price was moving sideways. You had a demand zone created. Price breaks out to the downside. And honestly, it only happened that way too because of this previous demand zone, right? So price breaks out the demand zone, comes back, tests it, gets your valid buy, comes up, gives you a higher low to buy it, continues up. Now this is your new demand zone. Price consolidates, drops, taps the zone. It's creating the first leg, and then we'll probably drop again, or it'll stay up here and create the second leg and keep going, right? So supply and demand, that's what we're doing. That's what we're doing, okay? Now, if I go down here, go to the 1 hour, now we have the anchor points that we mark. Our current anchor low, swing low is back here for sure. I'll say our current high has got to be up here, right? You can definitely say if we're shifting these swing lows and swing highs live, yes, you can say this is your swing low. It's okay. That's not a problem. But again, for me, I personally like to match my anchor points to the 4 hour because that helps me understand the confluence and what I'm seeing. Okay. So now with that, we're gonna go ahead, label these swing high, label this swing low. Boom and boom. Go down to the hourly, label my blue lines. Okay, so yep, you can have one here, right? Make this blue. You can have your second one right here. I would do it right here because we're kind of already above this mid area anyway. And then we'll have our third one right down here. Okay. So now we'll play everything by ear and wait. And again, if you can get alerts in once per bar close, crossing swing high. I'm actually gonna go like this. Crossing SH, crossing SL. Okay. Okay, cool. Right. Now we have those alerts and go back up, do these ones as well. So this way I can be away from my phone and know that the trend is moving in favor after I take my buy or sell. Right. I didn't throw that on once for bar close. Oh. Cool. Okay. And then we'll go ahead on down and continue the same work. AJ monthly. Same work. So I'm still thinking we have bullish all on our monthly as far as the Japanese, Australian Japanese yen. And the reason why is because we have this low that happened here, price at this high, price may come back and test this low. If it doesn't, and then this next candle continues, we know what's going on. We know what's happening. It's momentum. It's a consolidation zone we're leaving, which means this could be a new demand area, right? And the reason why is because this is creating a new box that price could break out of. don't know if y'all can hear my cat. This boy Malcolm. Like, what you on, man? All right, so boom. Again, we're gonna hit our bank levels. Go ahead, hit the. This looks like 88. Let's say 87 flat. Okay, we'll do 88. And the reason why I'm doing 88 is because that's where price stayed well above that. It came down to it, touched it, and then just stayed well above. Didn't even, you see, like as soon as this wick hit, everything was just like, yeah, I'm gone, I'm leaving. Basically, bank levels again. If you're an investor, like you're seeing a flat level being hit, and that's where discount is at, they're gonna buy. There's just no hesitation. Same thing here. Weekly target, 94 flat. Boom. Okay. 94 flats valid. You can do that, or you can even do 96. Okay, because again, we had the reaction. You might even, yeah, you might be able to get away with like 97. You could actually. That's actually fair. You're really where the real reaction hit. It got close to it, and then the reaction is played off of that. You see, y'all really close. I'm okay with that because that's just a hair off, but a equivalent reaction to what should happen at flat levels. So now again, our daily neutral levels for our take profits. Of course, we already broke that, so we're going here for the next TP1 for our daily. Okay. And where I set my TP1s is where price would have to break and maintain in order to flip the entire structure. That's where I put the TP levels. Again, they're at the wick, so that's where bankers ideally, if they come back to it, they shouldn't stop it out. That's just how that works. So if we go to our wick here, you can do TP2 level right here. That's actually pretty valid. I like that. TP1 down to TP3. Excuse me, TP2, right? So I take profit 2 will be right here. And then take profit 3 is gonna be dead at the end of the wick right here, right? So if it hits this, yeah, at this point, that's like the maximum point I could see it hit before a complete reversal back to the buy side. So now that we have that, we'll get the last TP on the upside, which would be like right up here. I'll probably do that one instead. This wick right here. Right, institution stepped in. As soon as they stepped in and price went under that 97 level, it was not coming back. Okay, so realize price falls under 97 right here. Try to get above one last time. Falls under, it's not coming back, bro. Came back up. Nah. So it's a strong level. It's just repetitively showing me. Every time we get near it, it's going to react like that. If it breaks past and then we get near it again on the other side, it's going to react the same way. So that's a strong level. We'll go ahead and keep it. We'll mark this TP3. And then we'll go ahead and dissect the low frame. We see it that the 4 hour has a nice downtrend going on. If I'm looking at this again, we want to go down to our 1 hour and get the anchor points marked. So we know if we do our swing high, it'll be up here. And so this is the high that needs to break to really flip this whole thing. And then we got our swing low, which was down over here. Okay. Now we can give it an alert. Crossing swing low. Okay. And same thing. Crossing swing high. Now, keep in mind, this video is definitely going to take longer because again, anytime it's a new month, I'm breaking down all the lines all over again. If you're not doing what I'm doing as far as like doing a channel or anything, you could always just leave your lines year round. I just like to have the freshness and just fixing everything and making the adjustments and just, of course, refreshing my mind on what should be happening. So that way, long-term wise, especially, so that way anything that happens on a low frame doesn't really throw me off, because you don't want to lose sight of the big picture, getting involved on those low frames. That's the goal there. So if anything, when you're watching charts throughout the week, you should really be watching the 4 hour if you're trying to intraday, because then what happens is every time you're coming back, it's coming back every 4 hour period of time, which is giving you a good idea of what should be happening next. So coming back at 8 o'clock, coming back at 12 o'clock, coming back at 4 o'clock, both in the AM and the PM is perfect. So now that we have our anchor points marked, we go down to our 1 hour. You can easily mark your liquidity zones if you'd like. Here's one pretty blatantly obvious one to me, where price was just retracing. Okay, let's go ahead and do this. Boom. Right. So here we got liquidity top, liquidity bottom. So all that's liquidity, money left behind, right? Price is moving up, trailing up, collecting money back, and then goes ahead and wipes it out. Now we have a new liquidity zone that's being created down here, right? So price is channeling. It's not breaking out of these two lines. Boom. Got here. Boom. Okay. Bow. And bow. All right. There you go. So now we can see price is channeling again. Price breaks above, we know what it's trying to do. If it stays below, we know it's up. Again, I always like to, generally the liquidity zones I like to do when it's away from the price itself. So like marking these zones down here. Nice little triple bottom going on. A nice little double top right here, right? 2 touches. Or you can just get that one pin right here too. That's valid as well. But I like to get to 2 touches because that's more prevalent. And that's actually what's more likely to get tested on the opposite side. Okay. Then we'll go ahead and do liquidity top, liquidity bottom. And then we'll go ahead and do the same thing right here, because there's another zone of liquidity. It's okay if your lines intersect a little bit. About. Okay. Yeah. So you can see the repetition and how I'm approaching, but what needs to be just as repetitive is how I'm executing. So how I approach my breakdowns is one thing. How I execute every week on a week-to-week basis is what keeps changing, which is not good. You don't want to do that. So always figure out your form of execution and stick to that routine. And then from there, just play everything by ear over time, right? So that you know what you want to adjust, how you want to change things, so on and so forth. And again, with this, on that, since we're on the hourly, we can always mark the our levels, our blue levels, right? So our key points, key areas within our swing high and swing low. Because again, this helps us find our entry very quickly. Right? So again, I like to divide it in 3 parts, where the from where price is, the middle level is here. Our peak low is here. From where price is, our peak previous low is here, and our peak previous high would be up here. Our peak previous wick, where like if price stays above this, we look at it to go here, and if it breaks above this, we look at it to really get up here, anywhere near our swing high, which then makes this a point of interest, and makes this a point of interest, so on and so forth. And the same deal goes on with the other 3 pairs. From where price is, our peak midpoint is like right here, right? You could also say it is here, where like if price breaks above and it stays above, that's okay. That's valid too, but I can visually see that. So, you can do either or. And again, I like to keep it to 3 lines. So I'm going to pick it here. Actually, I guess I should do it in the direction price is going, huh? Because if I go back here, yeah, Yeah. Nah, we're gonna do previous. Yeah. Because in the direction it's going, you just gotta pay attention to like how it's really behaving after it breaks it. If it's staying above, then yeah, that's a valid buy. This already looks like a valid buy though. This is a high low anyway. So if price continues and stays above this line, then we know we're getting here. If price drops below this line, then we know it's breaking its structure again to go back down here. Same thing here. Same deal. Price needs to stay above this. If it don't, then we know, it's not going to get up to the swing high. And if it doesn't break this ever, then we know it's going to come back down at some point. Same thing. If it breaks to the other side and it maintains, we know it's getting down here. So those I put within my anchor points so I can find an entry or understand when to leave things alone. Because say, for example, this is our swing high right now. We're in a downtrend, and let's say price starts breaking to the upside. It is okay for me to leave that alone. Okay. Or I can buy it up, scalp it, and then know that I have to get out around this zone. So you play either or. Now, if you leave it alone, it gets up here and then respects your swing high, then you also know it's valid for me to get in to sell, right? Or if you didn't leave it alone, you bought up here and it's closing, price is showing you sell signals, you know it's time to get out of there. It's how you play it at the end of the day. And the last thing I forgot to do with all of these, and I'm going to go back and show you, there's actually two things. It's my daily open and also marking the candles of last week. Always want to do this. So that way you know what happened from last week. That way you're able to do your intraday stuff as well. So if I'm looking at this, okay, we got price. Okay. So notice I put the end of it at the very tip of that wick because again, if price closed on the opposite side of it, then I know we're continuing on the weekly. That means the weekly candle is going to keep going up. Like to pinch it as hard as possible. Okay. Because then I know that anything in that zone is strong as hell. For real. Like if it's maintaining, it's really pushing through, it's strong, very strong. If it's barely getting there and then failing to break, then I know price is weak. It's not going to go through it. Right. Every chart is going to portray that differently based off how strong it's moving, how strong the volatility is. But ultimately, it's up to your discernment to get used to whatever pair you're on. That's why I stick to the same pairs. But I'm at a point where I'm not gonna lie. I feel like I'd be able to just go on a lot of different pairs and just find the right moves and just play ball off that. So I've been real tempted to do that. I'm not gonna lie. And again, I like to switch these to green, like my money zones, right? Because anything that has to do with the weekly, I generally do in green. I guess my daily open I should do yellow, huh? So yeah, you can see now. Now we can see, right? Everything is there. See the outlook of everything. It's dissected. Same deal. We finna do it right here. Go to the weekly, right? So if you have your lines of reasoning, everything clears up because now it's like, okay, why is price here? Oh, because of this, right? Same deal. We on rinse, wash, repeat for real. Every time I break this down, this also just motivates the hell out of me to like do better each week for real when it comes to trading because it's always the execution for any trader, especially if you're newer. It's always going to be the execution that makes or breaks what you got going on. But if you stay consistent with your breakdowns, that's like well over half the battle. The rest is really just being patient and understanding what's going on when it's happening, how to react to it as well. I don't need this to be this long because I'm not going to be, you know what I mean? Like price is going to only go however long up or down, right? So now we know where our zones are to watch out for that reaction. Okay. Now we know exactly what's up. We know exactly what's going on. As soon as I drop to the low frames, I know exactly what's happening. As soon as I go to the high frame, I know exactly what's happening. That's exactly how you want it. And then once you can master either intraday or scalping, you just stick to the strategies that revolve best to help you with those. So as far as UJ, this is still kind of in an uptrend. Not even kind of, it is an uptrend still on the monthly. This is our peak low. This is our peak high for the monthly, which means now if we go down to our weekly, that should be our leg, right? So this is our leg, our peak low, peak high up here. And then because of that, we're going to mark our weekly high and low. That needs to break to continue that structure. So 139,500 is what I'm looking at here. So this is like a mid-level. Yep. I do 139,500. Make that a weekly target. That's where our peak high is for our weekly leg, right? We could also say this is our peaky low as well. And the reason why is because this happened at 132 flat. 131.5 is valid. Okay. But this could also be a mid-level, right? Because if I'm looking at this whole leg is the buy, right? And I personally would rather do this because I know this being the entire leg that's a buy. If price breaks this is potential that it's only a internal breaker structure, right? So this is like if it broke that leg, I couldn't see that reverse the entire trend, right? It's not until price really breaks this low that now, okay, it makes sense that price might reverse. But to break within this candle, the next candle would really have to be definitive. The next candle would have to also break that next low. And then that's when I'd be like, okay, it's time for it to sell. So for me personally, I'm going to, keep my weekly target down here. And then this is just, if I go back up to the weekly chart, this is more of a mid-level to me, right? So with that, if I'm looking down here, 126 flat looks to be where that reaction happened, where price left and just never came back. Okay. Boom. That's about the zone. And remember, when I set those lines for the weekly target, I don't use zones because it just gets too in the way, but I'm visualizing a zone every time. It's not like I'm not visualizing that, hey, this whole area is valid. This whole area is valid. Okay. That's just how you have to naturally visualize it. But it's because that's a high frame tool that I'm using that I'm not finna be sitting there having that box just be there for so long. So I like to keep it real discreet and slim. And then if it gets near it, I know what's happening. Daily, we know right now our current take profit one would be right here. In order for that trend to really start breaking down, my TP2 would have to be right here in order for price to get really close to completely breaking its structure to make an entire reversal. And then my TP3 would have to be here, which is where the peak potential is before price can actually buy back up the other way, right? And then we'll do the same thing vice versa. TP1 is the start of the break of the structure. TP2, we're going to pick this wick up top. It's not too far away, but if it breaks this, yep, we're finally looking to go the other way. If it stays above this at TP2 and then moves up to TP3, which we can't actually see right now, and I'm going to actually mark my own level. I'm going to make it, we're at 140 flat essentially, so I'm going to do like 141 flat for my TP3. If it gets up here, that's like the peak high that it can probably be at before we see a complete reversal to the sell again. So boom. Okay. Boom. All right. Now that's it. Price is trapped. Now we dissect everything. 4 hour, look for our anchor points. Look at the price. Price is in a downtrend. Our anchor is probably going to be swing high here, swing low here. So we're going to drop to our 1 hour. We're going to find it. Swing high happen here, right? We're going to mark that level. Boom. 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 And then we'll swing high. Boom. Drop down, swing low. Boom, right here. Okay. Buy out. Okay. See how easy it is. And if you repeat this, rinse, wash, repeat, rinse, wash, repeat, man, do that for a year. Just see where you're at. See where you're at. Take your trades, leave them alone, see where you're at. Promise you, you won't regret it. And we'll do once for bar close, crossing, swing high. This one right here. Get it. Boom, boom, and swing low. Okay, boom, boom. All right. Now we have that. Now we know you can go ahead, you can mark your liquidity zones. This is our liquidity zone, which also is a supply zone, just as much as the liquidity. It's also a flip zone. Okay. Okay. And then you have liquidity here. So price channel went sideways, broke out, created a demand zone, tested the top of the demand zone at the top of this wick right here after the breakout. Continue back up to our previous supply zone, tested the supply zone up here, and then shot back down. And is looking to come wipe out our demand zone down here, which could continue the price lower, right? So, like ping pong, that's basically what I'm dealing with. All right. So, boom. And that's basically what we're all dealing with. It's ping pong, just hitting it back and forth. Okay. Now, again, you can go back to your hourly. You can figure out your blue line situation. You play it all by ear there. So my mid level is probably gonna be right here. Not even probably. That's just what I'm picking. So if price broke this leg and stayed under it, that's valid for it to come down to here. I'm actually right. I'm probably gonna actually pick this as my mid level. I like this right here because this is in a zone where, in essence, like it would have to respect this to keep going. So if it really does break this and continue down, I know it's still selling, which tells me that the daily wants to keep going down to this level, right? To TP1. Because again, price is always going to start with a fake move. If price opens at 4 o'clock, we get some buying going on around 12, maybe start selling off. I know why. It's to end off on the downside. So now we'll move on to the next frame. I'm sorry, I'm speeding up a little bit more just to kind of, get the video wrapped up. I don't want you guys to have to wait super long, but I hope this was super descriptive and is able to clarify, like, again, what I do on a week to week, month to month basis. This is exactly how I approach the market every time, and I don't change it because this is, with everything I have as far as even the indicators, this is the best way for me to see everything but not have to act on everything. So here we got the monthly, right? We look at this, price is still in an uptrend with the monthly. Looks like it just came down to test this month, and it could continue up higher next month. And then looking at this low to this high, this is probably the leg of our week. If I go down to the weekly, that's probably where I'm going to look for my points of interest, right? So that's our leg right here, if I'm not mistaken. A little bit lower actually, so it's going to be this right here. Okay. So we're gonna go ahead, look for our flats. 156 flat. That's what I'm gonna pick. Okay, win. And the peak weekly high is up here, around 168 flat. Probably 169, right? So okay, boom, boom. Make this our weekly target. Boom, right? And now we decipher everything, go down to the daily, mark our take profit levels, right? So look to the left, already smacked one. This would technically be, I'm gonna make this TP1. Okay. And then we'll go ahead and go down to TP2. Should probably be right here, right? And TP3. This is the peak lowest spot it can get to before it just shoots all the way back up. Or if it breaks this completely, we know we're just going down, right? So now same thing to the upside. Okay, so TP1 easily will be right here. You know, if price turns around, that would be my first target. That's a no-brainer, right? And we got right here, second target. Mhm. Then you could, yes, you could easily put this as your third target. Me personally, I'm not gonna lie, I like where that second one is. I also wouldn't mind putting it here because in my mind, if it gets up here, it's already like about ready to just break through everything. That would be a lot of buying pressure to flip from where it's at right now. If it gets up there, then I would assume we're coming at this wick if we stay above our TP2. All right, so TP2, TP3. Bro, what you on, man? You just had a whole meal. Then you gonna come over here like you didn't just eat. It's crazy. Crazy what you do for cash, man. This is me over here chilling. Don't pay bills. Don't pay rent. Nothing. We got all the stuff to say in the world, huh? He got quiet. Okay, so if I'm looking at this, we're in a downtrend on our 4 hour. You know, we had our high here, high low, high low, or excuse me, our high here, our lower low, lower high, lower low, lower high, lower low, lower high, valid, right? And then this would be our previous high. So that's probably going to be our swing right here from that to that. If I go to the 1 hour, we look at the high that led to this previous swing low breaking was right here, right? So we draw it out. Top of the wick, this is the high that led to this breaking. Because of that, this led to this low being created. Okay. And of course, you could always say it led to initially this low being created. This high led to this low being created, which also can make this a potential swing high. But keep in mind, I like to personally just give my anchor points room and then base them off the 4 hour anchor points so that they have confluence. So that way, if I know it is breaking at either of these ends, I know for a fact it's like, yes, that is where we're going. That's just what's going on because the 4 hour, it's correlated to the 4 hour. So the candle on the 4 hour has to be somewhere near either here or here to be breaking anything. Versus like if I do it all really close, if it breaks back up here, yeah, it must mean the 4 hour is going to go up. But now it's like, what does that mean for this? You know, this is still a valid level. So now we can go down. We already see this. This is clearly a liquidity zone. Price is moving sideways, channeling. So it's easily a liquidity zone. Okay, just like that. Mark that. Boom. Okay, and now I like to do my arrays. So here, my mid level is probably gonna be, yeah, let's do this actually right up here because price is actually going down right now. So low high situation we got going on. We got this hour, right? And then we got this down here, right? You could do either or. I personally like to do it on the opposite side of the way it should be going from where it is. So like this, for example. Like this I probably should flip it actually, right? Because this is actually just going downwards, right? So if it were to come back up, then yeah. But um, you know, it's all situational. It's just what's gonna help you read that situation better. For me personally, that's just how I see it. Like I would read this better because it's already under a level in a way. Versus like looking at it as it's coming to retest. And I guess I'm already seeing it as a downtrend, right? So I'm looking at it as like, what can you break next for me? I don't know. It's really up to it's really personal preference, man. Like no cap. Read it off the lines at that point. The blue lines are nothing serious that you have to really do because at the end of the day, the bigger picture is what's truly going to matter by the end of the week. But just keep in mind the beginning of the week is always just going to be playing with you. So just timing things right more toward the middle of the week is if you're going to swing, makes sense. Um, and yeah, just kind of playing it and just setting and forgetting it off your lines. Also, just wait for price to come to you too. Like if it's anything, right? Like what's going to stop you or what's going to hurt you from just waiting for price to come down and test this one more time at the beginning of the week? Not much, right? And then if it does do that, you can see like, okay, we're down here. It needs to respect. If you see it start respecting, you can buy it, and it's safe. It's a safe position. You can take it all the way up. So yeah, don't rush into anything and let the markets come to you, and then play off that. So far, that's everything. Again, I like to monitor all my trades on the 4 hour because it's like perfectly in between both, right? So I can see all my high frame information just by squeezing it. I see all my low frame information, right? Just by looking between my swing highs and swing lows, right? So easy, so easy to see it. So now at that point, everything is just about, letting the markets come to you, let it play off that. I'm going to actually mark up these currencies. I'm going to do it off camera, but based off what you guys did see for the what you guys saw for my like main pairs, that's going to be all the outlooks. That's going to be all the markups for this month. So at this point now, everything I'll be adjusting is just down on these lower frames and in between these zones, right? Because on a week-to-week basis, that's what's going to really shift. So from there, on my Friday overview video, I will explain how the currencies correlated to my outlooks. Because if I wait for both these charts to give me a signal at a specific line, that's more incentive for me to be able to actually get into whatever trade I'm looking at. The thing about some of these currency indexes though is that when you do get down on these like 4 hour, 1 hour frames, you can't see, like, price literally starts to patch up or like break apart a lot because it has different session times and these are different session breaks. So there's a lot more when it comes to the markets for some indexes, not all. Because if you go on the US dollar on the hourly, it's almost pretty much smoothed out. You can see it on the hourly. But when you go on the Australian dollar, there's way more session breaks. You go to Euro dollar, same thing. The Japanese yen, same thing. So what I do to get around this is I put my candles to Heikin Ashi, and that smooths out everything, and where you can actually see where price is trending. Because if you know anything about Heikin Ashi candles, it throws a wick in the direction it's trying to go. So if you see that price is trying to start going up, it's going to start throwing wicks towards going up, right? And then when the candles get small, that's where price is going to potentially turn around. So price was downtrending, see these big bearish candles, and then it starts to die down. Once it got small and turned green, that was valid for buys. It starts to buy up, comes down with some sells, they get small candled, and then you get a big green bullish engulfing, right? So this is great for identifying trends. And when it comes to this, like, this looks like it's on a daily uptrend for the Japanese yen, which means it's probably going to be buying for about the next week to a month, right? I'd say more so about the next week because of just how much selling has been going on. If I go down to my weekly, it looks like it's getting smaller on the sells, and it looks like our daily is just starting to buy it up. So if I'm looking at the Japanese yen should be getting a little bit stronger in this week. The euro might be still selling, but it could also be pulling back, just like the Japanese yen. If I go down to the daily though, yeah, it could be pulling back, and then we could get a test near this high. But at that point, we're just playing everything by ear. So yeah, this is what I would do when it comes to watching the indexes. Is I'm going to use the Heikin Ashi candles, and then that's going to help me determine the trend strength of a currency, which will then help me determine my decision making on all the other pairs. But of course, I'm not going to switch to these candles until after I break down all the regular candles on the high frame and then do my outlines. And then when I get down to those lower frames, I can start, getting all the detail in. But yeah, that's going to wrap up the video. I hope you guys did enjoy the market breakdown. If you guys give me feedback, just feel free to leave in the comment section. You can email me for any questions as well. This week, or no, I say this month, the markets should be picking up in a way moving into the fall, because we're going to start kind of moving back to that trend season a little bit in the fall, and then back into it heavily after all the holidays going into the winter. So right now is just that time to really, take those intraday setups to those scalp setups and be okay with that. And of course, we're going to be starting off a new month. So the new month always likes to pop off with high activity. So bigger moves are more susceptible to be caught in the beginning of next month. So definitely, yeah, just keep an eye out on that type of pattern in the market. And again, just go out there and kill it, you guys. Like we're doing great over here. Honestly, if I were to just take the sum total of all of the setups that I have like showed you guys, and I were to like line up how much would have hit 3% and how much actually hit 1%, it would have been, honestly, we would be in the blue. Like we'd be a completely profitable firm right now. So honestly, the biggest part about what I'm showing you guys is to truly just trust what I'm explaining and then just play everything off your lines and keep practicing reading price action, keep practicing reading candlesticks themselves. And even I'm working on it. So at the end of the day, all I care about on this channel is transparency and hoping that you guys see the raw side of trading and what most people try to avoid showing newcomers and things like that, to just only look flashy. Because again, it's a journey, it's a process. So this doesn't just happen overnight. It takes time. And I'm a 4-year trader going on 5 years, and profitability is still, it's still like a hill I'm climbing. So again, hope you guys enjoy the video. You guys have a great day. Have a great week. Go out there and kill it. Please, if you can, drop a like, comment, subscribe, share the video, and you guys have a great day. Peace out, High TF.